Hi everyone, this is Ali Hussein Kasim of Ali Talks Tech in this week's weekly roundup of tech news across Africa and those that affect Africa across the world. We are covering a couple of stories. The first one is the latest that just dropped yesterday. MTN Uganda is delinking its mobile money, or MoMo as MTN calls them, from the mothership. What are the implications for this? My next story that I cover is health tech in Africa and why or whether there is sustainability in this space. Then I'll look at the Africa Fintech ecosystem, an interesting report coming out, especially focused on a couple of fintechs in Nigeria and Neobank in Kenya. I will also cover South Africa's and China's tech cooperation and where this will be leading. Last but not least, Bitcoin in Kibera. Is this financial innovation or what is it? So let's look at MTN Uganda's move to spin off mobile money in an historic fintech restructuring. But let's back a little bit. MTN Group, the mothership based in South Africa, has long announced over a year now its intention to delink its mobile money from its telco under MTN Fintech Group. We are now starting to see the delinking going downstream into the countries that they operate in. A couple of years ago, MTN did the same in Nigeria. This was mostly like sort of a regulatory push because they needed to get into mobile money in Nigeria, and the Nigerian Central Bank were very keen to make sure that they don't get into a potential systemic risk that we currently have with M-Pesa in Kenya. So in Nigeria, they are licensed, the mobile money arm of MTN and other mobile money, other telcos are licensed under the payment service bank regime of the Central Bank of Nigeria. So we're starting to see the same thing in Uganda. This is interesting. It is interesting because it's showing the seriousness of MTN to actually delink mobile money into a separate entity. Looking forward to seeing how this will pan out. And also note that last year, MasterCard invested $200 million into the MTN Fintech Group. So that's showing some interesting conversations going on between the large payment players across the world, specifically MTN and Visa. And a couple of months ago, I did mention this MTN and Visa race towards dominance of the fintech and mobile money space in Africa. This is a developing story. We will be covering it as time moves along. Now, let me speak to health tech in Africa. Is it getting momentum? There's apparently a 17 million strategic investment, but all this is geared towards what is known as impact in cost. Bill and Melinda Gates Foundation has committed for 5 million. The NEPAD agency has committed 12 million in grants. For me, I think the time for some very serious conversations around business models and around sustainability from a business perspective is more important in my perspective than these grants and impact funding. I am, to say the least, a little bit skeptical about these investments that are grants that, unless we are seeing a path to sustainability, P2S, path to sustainability, we'll continue to have these conversations. Now, I want to cover an interesting conversation around the Africa fintech ecosystem. Despite global VC slowdowns and economic headwinds, Nigeria's fintech ecosystem is thriving. I want to pick three key players here specifically because they were named in the Financial Times list of Africa's fastest growing companies in 2025. Moniepoint, PalmPay, and Paga. So Moniepoint, which is formerly Team Apt, processes over 100 billion in annualized transactions and recently raised $110 million from investors, including Google and Visa, with plans to expand into East Africa. These plans are already panning out with the acquisition of Kopo and the recent approved acquisition of deposit-taking microfinance bank. Let's look at PalmPay, which has 30 million users in Nigeria and is expanding into Ghana, which is signaling its regional growth ambitions. Then Paga, with 21 million users, continues to scale through a diversified platform strategy. And these key players are considered some of the fastest, these key fintech players in Nigeria are considered some of the fastest growing players, fintech or companies in Africa. Umba, which acquired a deposit-taking microfinance bank in Kenya, has reportedly secured a $5 million debt facility. Umba's growth is slow, so hopefully this facility would unlock some growth. I want to give you a quick sector snapshot. The rise of these firms underscores the depth and adaptability of Africa's fintech ecosystem, from B2B platforms to consumer-focused wallets and infrastructure players. The diversity of models points to a maturing sector with multiple viable growth paths. It is very clear to me that in not a so distant future, hopefully this year, we'll start talking more about the traction and the impact of these tech companies more than how much money they have raised. Now, let's look at South Africa's deepening China tech ties. In the background of what's going on in the US and the long-term strategy of China's Belt and Road Innovation Partnership, South Africa is one of the most important, or probably the most important economy in Africa. So this partnership between these two countries is very important. And there are four key areas that they're looking at to discuss: Chinese Academy of Sciences, Beijing Academy of Artificial Intelligence, National Institute of Clean and Low Carbon Energy, and obviously one of China's largest conglomerates, Huawei. And they're looking at diverse collaboration areas. My last story is on Bitcoin. A couple of weeks ago, I was interviewed by a journalist, Mr. Dalton, and he had called me about a startup that is offering Bitcoin services or payments through Bitcoin in Kibera. And I found this quite interesting, very, very interesting. And my quick questions really is, how are these new technologies, especially in Bitcoin, empowering the underrepresented in financial services? Honestly, I don't want to talk about financial inclusion. I think we've beaten this down quite a bit. I would rather talk about economic inclusion or economic empowerment. One of the key conversations around this Bitcoin in Kibera was that these transactions will offer much less transaction fees as opposed to mobile money players. The question that I have raised, which I have not received an answer to, is simple. Would the volatility of Bitcoin cover the so-called high fees from mobile money players? I think we'd really need to drill down into this. And the story goes, quite a number of these traders are actually saving their hard-earned Kenya shillings in cryptocurrency, in Bitcoin specifically. Some of them up to 80% of their savings are in Bitcoin. that talks to concentration risk, number one, in one potential asset class, talks to the fact that I don't think we can even argue about the volatility of crypto, Bitcoin, Ethereum, whatever currency that you're talking about in the crypto space. The volatility is high. Can these communities that are already in distress, a lot of them, can they afford the volatility of these crypto investments? I think it's very crucial. It's very crucial for us to ask these tough questions. And what is the role of policymakers, technologists, and investors in this inclusive crypto ecosystem? How do we support communities like Kibera as they navigate this emerging digital frontier? I would argue, and I'm happy to have a conversation with anyone who disagrees with me, that we have bigger issues to deal with from an infrastructure perspective than to expose these vulnerable communities to the volatility of cryptocurrency. With that, ladies and gentlemen, I close my week's roundup. Looking forward to talking to you next week. I'm heading out to the airport right now to attend the second Next 176 Summit. Next 176 is the corporate venture corporation of All Mutual, which is one of the largest financial services groups across Africa. And I am certainly looking forward to that event happening tomorrow. Asanteni sana, looking forward to talking to you guys next week.